Now, let me just say this right off. Again, I'm no fan of the tariffs. Wall Street's freaking out that it's going to create all this inflation. It's not, okay? But I'm no fan of the tariffs. Even though they don't cause inflation, I'm still not a fan of them because the tariffs act as a tax. Who's going to pay that tariff? Who's going to pay that tax? Americans. Buying Canadian products, buying Mexican products, buying Chinese products. That will make Americans poorer, not richer. Leave them with less money to spend on other things. It will hurt the GDP because this money will be spent on the tariff, which is like a tax. So I don't even think it's necessarily good for the U.S. economy because taxes are already high. Not a fan of Trump's tariffs at all. I understand them. I understand the arguments of the Trump administration. I understand the arguments of national security from Jamie Dimon. Get it. I understand. I'm telling you why I'm not a fan of tariffs. But while I'm not a fan of them, I'm not going to make believe that they cause inflation because they do not. But Wall Street believes that. That's why we're getting an inflation freakout. Wall Street and in the bond market with yields soaring. The 10-year yield is bouncing on Friday, bouncing off the 50-day moving average. So again, likely going to give us a sell-off in the market. 10-year yield has a negative correlation with the stock market right now. It's bouncing off the 50-period moving average, and as this goes back up to either get a lower high or goes back up to test the highs here, one or the other, we're going to see more volatility. And again, I think we're going to just get a pullback on the S&P 500, go higher and top out after the next run-up. Two things. Again, we're going to see concerns about inflation with the tariffs. Second thing is concerns about a trade war. Now we're getting both of those. We're seeing Wall Street selling off on Friday, concerns about both of those issues. We have the president slapping tariffs on Mexico, Canada, and China, an additional 10% on China, putting in 25% tariffs on Mexico and Canada. Now, let me just say this real fast. Again, I'm not a fan of tariffs. The tariffs act like a tax. This is about a $250 billion tax, these tariffs that are going to be implemented on Mexican products, on Chinese products, and Canadian products. I'm not a fan of tariffs because I'm not a fan of taxes. And that's really what this is. Concern about, it's going to create all this inflation. And again, the reason why we're going to see a sell-off in volatility, eventually an inflation freakout is going to happen. This is the beginning of it right here. So again, that's why I'm not a fan of tariffs, but I understand why they're doing it. Jamie Dimon just referred to that and talking about it really being necessary for national security. And he talked about that. So I get that. I understand that. And I understand that the White House is doing this to try to combat the drug crisis and try to fix the border crisis. I get it. Now with the president slapping tariffs on Mexico, Canada, and China, Mexico and Canada are now retaliating, doing retaliatory tariffs. Now, as promised, President Trump slapped tariffs on Canada and Mexico, as promised, on Saturday. Shortly after that, on Saturday, we've had Canada and Mexico announce retaliatory tariffs on the U.S. Trudeau out there talking tough. This is going to have real consequences. And I'm showing you in this video that there's really no comparison between U.S. economy and the economy of Canada, or the U.S. economy, comparing it to the Mexican economy. You're not talking apples and apples. You're talking two very small economies when you compare them to the United States of America. So now, right before Trump implemented the tariffs, Trudeau came out and, again, talking like a big talking blowhard. Canada promises forceful and immediate response to any U.S. tariffs. The size of the GDP of the U.S. economy compared to the size of the GDP to the Canadian economy? They need us a whole lot more than we need them. There's no comparison. But this guy has decided to blow up the Canadian economy on his way out the door. It's not the sharpest knife in the drawer. And, you know, if he were smart, he would try to resolve the issues that the United States wants fixed at the border rather than blowing up his economy. Because, again, they're already seeing weakness in the Canadian economy. They're going to go into recession for sure now. And this guy, Justin Trudeau, he's going to put them there, making an absolutely foolish mistake. If they tried to resolve these issues, maybe the tariffs would go away, be rescinded by the United States. The street's going to view this as a big trade war, likely get rattled for a little while, then go higher, and then eventually top out. It's a threat. And Reuters just put out the fake news on Friday telling us that the tariffs weren't going to be implemented until March 1st. Market tried to rebound on that. It ended up, I talked about this in my last video, in the market, you had the White House press secretary come out and say, no, that's a false story. The market sold off on that, but Reuters was the fake news on Friday. Canada now announces retaliatory tariffs on the U.S. Trudeau out there talking tough. Just one problem. And Patrick Bet David nailed this beautifully when he pointed out who needs who more. Canada's GDP, $2.14 trillion. The U.S. GDP, $27.36 trillion. Who needs who more? It's going to blow up their economy. You know, if Trump turns around and says, well, okay, we're going to raise, Canadian tariffs by 25% per month until you decide you want to fix things and until you want to stop these tariffs, I mean, they're going to go into recession immediately. They're still going to have a recession, but this guy is making a very, very foolish mistake. Patrick points out if Canada were a state, a U.S. state, it would be number 4 in GDP. No comparison, the Canadian GDP to the U.S. GDP. No, Trudeau's resigning, but I mean, he's blowing up the Canadian economy and I was way out the door. Extremely stupid decision. And I'm not a fan of Trump's tariffs. I understand the arguments, Jamie Dimon. I understand the White House, what they're saying. I understand Wall Street believes that the tariffs are going to create all this inflation. The tariffs are not inflationary. I talked about that in my last video. I'm not a fan of the tariffs, but I'm not going to pretend they're inflationary when they're not. Inflation is caused by an increase in the money supply and excessive government spending. That's what causes inflation. In a nutshell, had tariffs before. Inflation were just above or below 2%. This back with Trump in the first administration, it didn't create inflation. We didn't have inflation until the Fed's destructive policies and the government deciding, well, let's pass out $6 trillion in checks and shut everything down. Talked about the inflation boogeyman and the Wall Street running around, I should say the tariff boogeyman, afraid of tariffs because they think they're inflationary. They are not. The concerns about that, because Wall Street believes that, even though it is not true, Wall Street believes it. And again, I think that will eventually volatility right now, and then later on, final climax high with the stock market. We just saw this confrontation with Colombia. The Trump administration put in emergency tariffs immediately, other restrictions on Colombia, and the issue was resolved in like 10 minutes. Colombia caved, issue was resolved. They agreed to fix the problem. This guy is not wanting to fix the problem. The United States has to do, when if they're moving towards recession, this guy's going to get them there a whole lot quicker. And it's going to be a whole lot worse because of foolish decisions like this. And I'm not a fan of tariffs, but retaliatory tariffs in this situation are not going to work. Wall Street's going to get rattled by this on a trade war. There's about a trade war. There's really no comparison. And I'm sure the Trump administration is only going to make it more painful for them making this foolish decision not just resolve the issues and try to make the tariffs go away. This guy's going to push everybody, the Canadians, into recession a whole lot quicker. Now, again, why we're going to see in the coming weeks or months ahead major concessions out of Mexico, out of Canada, is because of their exports. Patrick, again, nailing the issue. 77% of Canada's exports go to the United States. 84% of Mexico's exports go to the United States. Patrick adding a little humor here to the situation. These retaliatory tariffs are a stupid idea. They would be far better off trying to resolve the issues with the United States that Trump is wanting resolved than doing this, because it's only going to hurt them. And again, they're going to be calling up Trump in the future and making concessions. So why play this game, and why not just do it and resolve the issue and get the tariffs removed? Makes no sense at all. It really comes down to, if they don't play ball, they're only hurting themselves. If they don't change their behavior and fix these problems, the United States is just going to keep applying more and more pressure. Going to go into recession all that much faster. Now, Mexico is vowing retaliation as well, but not detailing what the targets of the tariffs will be. The President of Mexico is also wanting to push her economy into recession faster. Again, these recessions are coming. The recession indicators have already flashed. If you watch my videos, you know that. I talk about the recession indicators all the time. The US is going to have a recession, and we're going to have global economic slowdown. It's going to happen. Leaders of Mexico and Canada are going to push their economies into recession all that much faster by making these horrible decisions, retaliatory tariffs. Because again, and Wall Street's going to really freak out on this, as I've been warning. Eventually, it's going to be an inflation freakout, because Wall Street believes that the tariffs, all these tariffs, create inflation. They don't. But Wall Street believes that, and eventually, it's going to really rattle the market. It's going to peak very, very soon. Now, this is going to give us volatility going into next week. Now, again, why is this a bad choice to do retaliatory tariffs? Because Mexico's GDP is smaller, even smaller than Canada's GDP. And again, their GDP is 1.46 trillion. The United States, again, 27.36 trillion. Another bad choice. And again, that's going to put them in a recession a whole lot faster than they would have been. If Mexico wants to sell anything in the United States, probably try to work to resolve the grievances that the United States has in order to remove the tariffs. According to the Trump administration, they're putting the tariffs in place, and they're implementing the tariffs in order to try to change behavior, to try to resolve issues at the border. So Wall Street is probably going to get pretty rattled by this, but I'm trying to show you there's no comparison to the two economies here with Mexico and previously with Canada. Mexico and Canada need the United States. They need to sell stuff in the United States a whole lot more than the United States needs them. So again, you're not talking apples and apples here, and that's why I'm trying to take the time to show you this. The market's going to get rattled by this. Things might calm down. Some people go make a new high. It's going to eventually top out. And this inflation freak out, concerns about a trade war, is likely going to be one of the catalysts, along with the bursting of the AI bubble that I've been talking about. NVIDIA has topped. But you've got the leadership in Mexico and Canada going out there and doing these retaliatory tariffs. The United States responds to those retaliations. It's going to crush their economies like a bug. So the trade wars begin. Trade wars of 2025. But really, when you look at the economies, there's no comparison. By implementing the retaliatory tariffs, they're only hurting themselves and pushing them into recession, all that much faster. That's the point. So again, I was talking about still getting a last several videos, I've been talking about getting a bigger Fibonacci retracement, filling this gap, or maybe getting something uglier and filling the CPI gap. We'll see. But I don't think the January low, I called the bottom here. I told you we were going to bottom out on the trend line, the 2023 low, and fill the gap from the presidential election. We did that at 57.83. We had the big rally I was looking for. I told you we were going to get a pullback and back test the breakout of the bull flag before going higher. Go watch a video that I link at the end of this video. I go into all this detail on the S&P. So again, I just want to, let you know, we have a bear flag pushing up into the gap fill area at 61.01, which is gap down from the deep seek sell-off, which tanked NVIDIA stock by 17% on a close, 18% at the intraday low. And again, all the AI stocks and the tech stocks, they all sold off. Those two issues revealing why the stock market is going to top very soon. Now, I think that we're going to sell off, but then I think we're going to go a little higher. Go watch my video and you'll see that. Bursting of the AI bubble, which we're now seeing with NVIDIA, and the deep seek off, told nothing's taking NVIDIA down, but yet it is. I heard scratching their head trying to figure out what's going on. Exactly what I told you was going to happen. Bursting of the AI bubble, and then the inflation scare. I think we're going to have an inflation freak out. We're already seeing it with the Fed and the bond market, and again, rattle the stock market. I think we're going to get a preview of coming attractions, or actually we had a preview of coming attractions there on Friday. I think we're going to get a preview of coming attractions for a bigger sell-off, though. After this sell-off, I think we'll resume the advance. I do believe inflation, concerns about inflation, is going to freak out the market. Now, again, we're going to be moving into recession. Should not be worried about inflation right now. Worried about recession. They're making the same mistake they made in 2007. We're going to have a deflationary bust with the recession that is coming, and it is coming. The recession indicators are telling us it's coming. I believe the recession indicators. But again, we're probably going to see volatility surrounding the concerns about a trade war, concerns about, oh, we're going to get all this inflation, when we're probably just getting an ABC pullback for a higher low. So again, over here when I told you we were going to sell off, it happened. Triangle broke down, we got a bigger sell-off. Nailed the bottom. I told you it was going to be falling on the 9th and 10th. I told you we'd be bottoming the following week. We did. The very following Monday on the 13th, nailed it. I told you we'd get a pullback. It's happening. Telling you also we're going to see a bottom in here at a larger Fibonacci retracement, likely a back test, possibly the gap fill with the CPI rally here, but that gets filled later. But I think you're going to see a sell-off at one of these Fibonacci's or these gaps down here. This is the breakout gap right here ahead of Trump's inauguration, which I told you we were going to get that rally ahead of inauguration day. That happened, and that's why I was predicting a bottom. When everybody else was saying we're going to have this head and shoulders and we're going to go down, I was telling you it's a fake pattern that evolved into a bull flag pattern. So again, I think concerns about the tariffs with inflation and a trade war, I think that's going to give us more volatility. The bear flag will take us down here probably towards our back test and maybe the golden pocket and the Fibonacci's here, the retracement of this move right here. But higher low is likely going to develop. We're going to go a little higher, but we're going to top out very, very soon. Go watch my last video and you'll see that on the S&P 500. I think the tariffs are going to create, and concerns about a trade war are going to create some volatility that, is going to another leg down. And that's why I told you I didn't think that was a bottom, and I stuck to my guns. Even though I predicted that we were going to get the sell-off, like I predicted the bottom in the rally, sell-off back in December, I told you I don't think it's done here. I have the guts to tell you exactly what I think. Very few people would do that. Most people predict things after they already happen. I try to tell you exactly what I'm thinking. And again, I told you I could be wrong. Maybe that's a bottom, but I told you I didn't think so. I think we have this ABC corrective move here, and I think we're going to move down into this golden pocket somewhere, and then I think we're going to bottom, get the push higher. But the time is short. P is likely going to go make a new all-time high after this sell-off, but the time is short. It's going to top out soon because recession is coming, and most people have absolutely no idea that it's about to happen. The recession indicators are already flashing. They were flashing in 2024. If you think Trump's tax cuts are going to prevent that, you're wrong. Because, again, George Bush's tax cuts didn't stop the recession. It's too late. The recession indicators have already flashed. Damage has already been done that's going to cause the recession. No person can stop it, and the tax cuts are. You know what the tax cuts did in 2001? Bush ran on the tax cuts. George W. Bush got them through, and there was hopes of the cuts. It was a counter-trend rally. The market had already dropped 20%. Well over 20%, because it was the second rally. Emergency cuts were the first. I could tell you what the rallies are going to be. It's going to be on the Trump tax cuts getting through, probably somewhere in the summer. The Fed emergency cuts, when we get the recession that they're telling us we're not going to have, because they're oblivious and they're always blindsided. They were blindsided in 2001. They were blindsided in 2007. Fed's doing what they always do, telling us, no, we're going to have this soft landing. It's a bunch of nonsense. I believe the recession indicators. I just want to show you why I think, again, concerns about a trade war, concerns about the tariffs and inflation, it's going to rattle the stock market. And then we'll see things calm down, and then we'll go back up, and maybe the market just shrugs it off. Maybe something happens. There's hopes of getting it resolved. Maybe Trudeau flies to America again to see Trump like he did before. Who knows? Whatever it may be. But I think you get a higher low. I think you go higher. And then I think you're going to top out not too distant future. And if you watch my video that I'll link at the end of this one, through in great length and detail, you'll see the support. You'll see the resistance levels. But Canada and Mexico making huge mistakes by putting on retaliatory tariffs, going to push their economies into recession a whole lot faster than if they were to just try to resolve the issues with the United States, with the border crisis and the drug problem and all the rest of it. But Justin Trudeau ensuring that Canada is now going to have a recession, and it's going to happen a whole lot quicker because of these horrible decisions that are being made. Yes, the United States is going to move into recession, but I want to remind you, the recession indicators have been flashing long before we ever have the tariffs being implemented. The damage has already been done long before we ever got the tariffs being implemented here in February. But Trump's going to inherit a recession. He'll probably be blamed for it. We had the tariffs before and we didn't have a recession. 2018. And I'm no fan of the tariffs, but the truth is the truth. We've had the inverting of the yield curve. Now the uninverting, and again, that's telling us something is hugely wrong with the economy. What else? We're going to have a recession, a very reliable recession indicator. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the chart, if you like the indicators, please support the channel. I just put out all the information there for free, and just ask that you partner with me. Do what you can to help out, but I need to hear from you in order to make it work. If you're new to the channel, my name is Ron. We talk about the stock market. We talk about the charts. We talk about the economy. But I don't have any sponsors. I turn those offers down. They contact me all the time. I don't want to sell you a bunch of stuff you don't need. If you could take a moment to partner with me by supporting what I'm trying to do here and showing you these are the charts that I look at every single day to make decisions off of. Find that helpful. Please consider helping out today. Thank you for your consideration for that. And real fast, again, I showed you the close-up here of the wave 2 I'm looking for. Again, I think it's going to be followed. I think we're going to come down to this area. Talked about this in great length and detail in my last update. We're going to hit the trend lines here. Get a bigger sell-off. I think the January low that I called there at this trend line, I think it's going to hold. This is a longer-term trend line going back to the 2023 low. And then I think we're going to push up into this other trend line, and I think we're going to see a top. It's going to be concerns about inflation and a trade war and the other stuff that I believe will happen with the coming recession. The market will begin to price that in ahead of the recession. I think we'll see the AI bubble begin to pop with NVIDIA's recent collapse, as I've talked about.